In this video, learn how to handle those frustrating stocks that you do not trade well. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, a firm prop trader and I provide a template for how to handle those stocks that you do not trade well with a step-by-step trade example in QCOM and Tesla. Let's get to work on sharing these important trading lessons so you can grow your trading account.
The trade I decided to playbook today was it's on May 28th, and it's essentially breakouts based on market context. So over the past few sessions, Qs and SPY had been consolidating over its 10, 20, and 50 moving averages. And one thing we were looking at was what was being bought, right? So the strongest industries in the market over the past month had all been defensive. If you look on the right, you see like oil, metals, and mining leading the market. And then over the past 5 sessions, however, you start to see a different story. Like PVW, which is clean energy, IPOs, ARK funds starting to lead the market. And so that's telling us that tech is getting bought, and we're seeing that we could potentially break out. Another thing that tells us this is that a part of our scanning process after hours is figuring out all the stocks that move 4% or more, and comparing that with the stocks that move 4% or less. And this gives us a tell of exactly how are these stocks moving, what's being bought, and like what potential trades are there. And so over the past few sessions, 2 sessions exactly, what we noticed was there was an increase in number of 4% breakouts despite Qs and SPYs staying in range. This is pretty strange, right? Just because historically when you see a lot of breakouts, you're going to see breakouts on the indexes and big moves on the indexes as well. So this is kind of indicating to us that there's a good chance that we'll see a breakout in the near future, kind of adding to that market narrative.
Super curious, Brian, as to how you came up with 4% and how you observed this, because this is a great observation, something that I'd love for more people to do. So want to dive deeper into how you spotted this.
Yeah, to be honest, 4% is, I think if you did it like 3 to 5%, it would probably be the same. We just wanted to see, I guess, what are stocks that are moving and that'll capture like, I guess all industries, if that makes sense, just because like 4% is going to be substantial for like a large cap versus like a small cap, which it might not be. And how I go about doing so is that we just have like a scan feature. It's just a really simple filter that'll filter, say, average volume over 500K and then closes over 4% on the day.
Okay, gotcha. Love it.
Appreciate it. And so real quick, this is just Qs and SPYs on the daily. Don't need to talk too much about it, but as you can tell, it's an extremely tight range over the past few sessions. And then the moving averages have been a huge help on the daily as well. And as you can see in both of them, the 10-day moving average is increasing at a pretty steep rate. And so key inflections I'm watching going into the open is this Q's 334.75. As you can tell, the past couple of sessions, we failed to get over. So being able to hold that would be a clear change in character. And then on SPYs, this one's a little more discretionary, but I'm looking to see how we hold over yesterday's range and hold this gap. This is essentially how we're going about doing so, is seeing if a first move is lower, like are there bids, are bids stepping up, are buyers taking this aggressively? And most importantly, do we see clear buying relatively close to the open? With things opening so close to inflection and a breakout narrative supposedly happening, that's exactly what we're looking for.
Hey, so Brian, you're noticing, you made a great observation.
Appreciate it.
That, hey, these stocks are up 4% and the overall market is kind of stuck in a range. Right. So how are you thinking through those levels for Qs and SPY? Is that something that's going to be an extra check in your favor? Is that going to be something where you're going to need for us to be above certain levels on Qs? How are you guys thinking through that?
Yeah, 100%. It's definitely more of a check in favor. And what it affects is it affects the execution style, how aggressive we're going to be in terms of targets, and how big we want to get into these positions. It's not necessarily like it clears this level, therefore it's strong. It's more of how are they all moving together, and it ties to with what's being bought. So on our screens, we'll have IWMs, SPY, Qs. We'll have a list of industries, list of sectors, and all of that kind of ties together into the market narrative. It's not really just like one or the other.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So in terms of names, when we're choosing names, one of them was Netflix that caught our eye. And the reason is over the past week previous to May 28th, what we saw was NVIDIA, a market leader. We saw Facebook, we saw Google pushing highs. And that was in turn with when Qs and SPY were strong. So seeing that was a check in favor as to why we thought Netflix could be a name that could go. It's also consolidating really well in the daily, sitting on its 20-day, and the 10-day was increasing as well. And yeah, consolidating at top end of range means that we're really close to inflection, aka the RR on that position is really good if it comes. And Qualcomm was the other name we were watching. And so the reason behind this one was all the moving averages were really close together. That's just telling us that price is compressing, there's buyers and sellers on both sides, and that an expansive move could definitely happen. We're also opening right over its 50-day with the tight consolidation. That's another check in favor. And again, the increasing 10-day is a big tell. So in terms of catalysts and fundamentals, and the numbers, the two that I'm really focused on here are average volume and ATR. So for this type of trade, average volume needs to be ideally over 2 to 3 million, but over 1 million is a baseline, just because those are the names with tighter spreads and easier to day trade. ATR, we found that when I look back at my previous trades over the past 6 months, I made most of my P&L off names that with an ATR over 1. And so from that period forward, it's just been, if it's over 1, then it's tradable. And this last part that we've recently added to part of a check in favor is, if you remember the end of last year, when we saw a bunch of those growth names get bought up, a lot of them had really high sales quarter-over-quarter growth and EPS quarter-over-quarter growth. So that's just one thing we're seeing, especially if we're trading a tech name, if we're trading a growth name, having these numbers is another check in favor as well. And as you can tell, like, these are very substantial. Trading plan. And so I broke out the trading plan into 2 parts here. So the first part is going to talk about the market overall, what we're looking for, and then the second part is the execution side itself. And this is all done in the pre-market before they open. And to summarize, what we wanted to see was breakouts occur across the board, so across all indices, and then as well as in SMH, FANG, and growth specifically. We want to see those lead and show relative strength. And in this market overall, this is over the past couple of months, I'm just taking profits a lot quicker. This was from running back on my stats and seeing that I had a little higher MFEs than I would like. It was giving back more profits than I would like. And so until things clear up more, and especially when the narrative isn't adding up to what I would want ideally, that's when I'm taking profits a lot faster.
Hey, can you just fill in some of the younger guys on what MFE is and how you're using it?
Yeah, so MFE essentially dictates, like, I guess what your unrealized profits are in a very simple sense. So like throughout the course of a position, how much were you, like, what was the max that you were up? And then I kind of see that as I use it more of a general gauge. It isn't like it needs to be this percent. But when I'm seeing that, like, I have higher MFEs than I would like, and I'm seeing that, like, I just feel like I'm taking, it's a little tough for me because it's really discretionary and based on the trade. But when I just kind of see essentially a pattern of higher MFEs than I would like, and that's a really easy thing to see on TraderView as well.
Just for the youngest guys, so MFE is maximum favorable excursion, and that's one of the things that we measure in our stats for you guys to keep track of.
And yeah, so if we're to be strong, pulls in the market should get bought aggressively, or we should go immediately. That's because of where we are opening, gaps in the range, and the breakouts that we had seen leading into today, or into this day. And we definitely don't want to see us get under yesterday's range or any type of false breakout narrative playing out, meaning strong selling volume or a stepped move on initial move higher. And so now the execution plan. So top names, Qualcomm and Netflix. Execution style is opening drive or opening a range break. This is where we found that we have the most edge, best RR. And if we're to be trending, these are obviously the best prices on the day. And points to watch. So this is something I've added really recently into my trading, but kind of to the point previous of negating having a really high MFE. These are false breakout points where I believe could happen. So on Netflix, it's 508.50 and on Qualcomm, 136.50. So I'm watching these inflections essentially for like really carefully on the tape to see, is there going to be a change in character? Do we stuff at these points? Are sellers there? And how I'm deciding where these points are just from high volume areas, previous resistance on like a daily chart or any higher time frame, as well as just what overall made sense and what we're kind of seeing over the past couple of sessions as well. And potential reasons to sell. So I'm not going to go through all of them, but these kind of are the main points. A temporary change in character on tape will automatically mean I take off a quarter to 30%. High volume capitulation, a sell will immediately make me take off 50%. And a change in market narrative. So if what that means is if I'm thinking we're going to be strong on the day and we're breaking out, we stuff and low day breaks on Qs and SPY. Obviously, then that's not the narrative that I wanted. So if and because we're trading these higher beta names, that's pretty prevalent. And then full price targets is going to be ATR or average true range. We're dabbling with this potential like 15 to 20% swing as of right now. So that's if we close at high a day, I want to be swinging 15 to 20% for a potential 2 to 3 day move. Right away, off the first 10 minutes, Qs is leading. We're holding well over opening range after a false breakdown. This is exactly what I want to be seeing in terms of price action. However, it's one thing to note is volume is low. One thing we'll look at is the opening bid volume of relative to the past previous sessions. In past previous sessions, a lot of the days started with an opening bid of around 5 to 600K. So this is really low. And SPY is at low a day. So obviously right off the bat, this is already not the ideal market narrative. So I'm weighing that as a potential thing to note as like a hesitation as to getting super big or being super aggressive in terms of targets. And so first 10 minutes continued. So I'm also watching SMH and FANG. So both are looking really good at the time. They're holding over their opening range. And yeah, this is exactly what I want to be seeing. So now first 10 minutes on Netflix and Qualcomm. So both have really clean opening range breaks. Bids are stepping up. Neither garnering much volume, so that's a thing I'm weighing as well. And I'll show a Netflix closer on the tape to explain that better. But I do enter long on both of these opening range breaks. Okay, so next 20 minutes. And so this is where things kind of change. And so if you remember what I was talking about earlier of looking at Qs and SPY really closely to see if the narrative continues, this obviously tells me that this isn't happening. The false breakout narrative is more likely now, and that a really strong breakout narrative is more unlikely, right? So we stuffed pre-market high on Qs, put in a lower high, again, no substantial buying volume, and now we're starting to fade back into opening range. On SPY, we're breaking low a day after stuffing and failing to hold VWAP. And so in the short term, this is telling me that it's weak. And if I want to be long, really aggressive on an opening drive, opening range break scenario, well, that'll most likely not work out.
So just a quick idea, and you probably have thought about this, and you're doing a really good job looking at Qs, you're doing a really good job measuring strength in a particular sector at the beginning of the open. you might think about, hey, is there an ETF that I also want to watch? So, maybe you want to watch something like XLK at the beginning and check in on how that's doing as well.
Right, 100%. Yeah, so at this time, I believe I had SMH and FANG, F and GU pulled. And so now I'm just going to break it out into a more broad view of Netflix. And so as you can see, we have the first move higher on extremely low volume, right, compared to opening bid. That's what I'll use as a relative gauge of high and low volume. And we're slowing down as we come into the value area. So if you see like size of the candle, and on tape you'll see like how aggressive offers are lifting. As we come into that 508 or start to come into that area, we're stalling out. And then the first lower high or potential to catch and move higher gets stuffed. So there's no follow through, and we see a failure of buyers to appear at VWAP as well as we sell back into opening range. And similar idea kind of happens on Qualcomm. So high day breaks are stuffed as we approach resistance areas as well. As you remember in the pre-market plan, I was talking about this 136.50. So this is exactly what I was watching for. And so even though this one is a little bit better in terms of the entry point, because we do see aggressive buying as we break opening range, this is a huge check in favor to us and something we're weighing. And what we like to see ideally is, does the volume on the break equal or get larger than the opening bid? Because to us, like, that's a huge change, right? That's not something you're going to see regularly, especially day to day. But one thing to note is that as we continue higher, volume drops off. And so if we're going to have a super expansive move, we're going to see ATR or 2 ATR on Qualcomm, that's pretty unlikely. Volume's going to die off so early into the morning. We're not even 15 minutes in. All right, sweet. So now executions. I'll start on tape. And so at this point in the tape, I'm in about feeler size on Netflix, just seeing first move lower was on really low volume, buyers are stepping up. And so I'm keeping this wide at this point, and I'm seeing if we claim 505, which we weren't able to claim before, 504.80 to 505, and bids claim that, how are buyers stepping up? So we break 505, and bids are stepping up. At this point, I'm adding. And I'm looking to see two things. I'm looking to see, are offers lifting and do bids hold, and if volume comes in. And so at this point, what I'm thinking through is, if we flush under 504.50, I'm immediately cutting half, seeing where this position is, and maybe even cutting full. If we're able to hold 505 for an extended period of time, and I'm able to get good RR where I believe we shouldn't sell under VWAP, then I'm moving my stop up, and I'm trading that from there. And as you can tell right off the bat, we're not getting substantial volume, we're not lifting higher. So how I'm interpreting this information is, like I said before, if we flush, I'll flatten out. But if we move higher, I'm not gonna have super aggressive targets. I'm gonna look to cover risk into the first move, just because this is already not adding up to the narrative I wanna see. As you can tell, 100K volume at the open for something that does 4.7 million average volume is extremely low. So at this point, I'm continually waiting. I'm also watching across the board. How are other names holding up? How are other names being bought? And just weighing all of that together.
Yeah, and just a question. So QCOM is going to match up better with SMH.
Right.
QCOM is going to match up better with some of the other names. Like you'll notice QCOM moving in sync more with something like an AMD. Not as much with a Netflix. So I'm wondering if you thought about whether or not you would expect QCOM to really move the way Netflix would move. Those stocks aren't generally stocks that I would pair together.
Right.
They're not in the same sector. They are independent of each other. Whereas I might not say that for a QCOM or an AMD, QCOM and an AMD. Thoughts on that?
Right, 100%. And yeah, I totally agree with you. So I'm watching, that's why I was watching like Fang and SMH separately. So the idea stems from we're most likely gonna see a breakout in the market. So what I'm watching is what's gonna get bought. And so I'm kind of seeing like, are Fang names gonna lead or SMH names gonna lead? And so that's why they're kind of split up in different industries. But I am watching AMD, NVIDIA on the side, and that's actually something I wanted to ask about later in the presentation.
Okay, I'll wait for that.
Okay, perfect. So as you can see, now we lift. Um, I'm looking to see our bid stepping up and our sellers stepping in aggressively. Because we're moving on such low volume and so light, it's very easy for a seller to come in with substantial size and absolutely wipe us back into opening range, right? Like none of these bids are that substantial. And so these are things I'm weighing. And also although we're moving higher, I'm constantly thinking about is the spread going to open up to a point and then I'll be back at my break-even price. And also, how substantial are the offers lifting in terms of independently to each other? And so we'll continue pushing higher in a little bit here. The good thing I'm seeing right now is there's nothing telling me that we're going to stuff really aggressively. Shallow moves lower are still getting bought, so I'm still holding this position. Spreads tight and decently tight for this name, so. And so we're gonna push to about 507 some change, and that's the point where we start to stall out, and that's where I start to cut risk. And I take off that 25% lot that I talked about earlier. But yeah, that's pretty much it on the tape. And so in terms of executions, feeler on high low, hidden on opening range broke, out a quarter as we start to slow into 507. And then I was out another piece into failure to hold VWAP. And at this point, I don't want to go red on any of these positions, especially with the market narrative changing. So everything is moved up to more or less a break-even stop. Similar execution on Qualcomm, more of a momentum-based one in this one. So my first position was the opening bid feeler that got stopped. I hit in on opening range break, especially when volume was there. Covered risk as we came into resistance, and we broke high day and stuff, right? Broke high day by like 20 cents and stuff. To me, that's a change in character. I covered risk at that point, and then whatever left, I just have at essentially a break-even stop. And so this is what I wanted to talk about. So I've developed this character sheet about a month ago. Essentially is like a ranking system for the type of names and how I believe they trade and how they match up to my execution style. So 1, ideal; 2, market leaders; wick low, reliable, especially on opening drives, opening range breaks, and high volume. 3 is kind of missing 1 to 2 components. 4, they're tricky. That 4 is where it's really hard to trade. So for me, like if I have a 4 on it, that's something I'm eyeing really carefully. 5 and 6, I will only trade if the setup is really ideal and the entire sector, industry, and the market narrative is all lining up. And so that's what I wanted to ask your opinion on, Bella. So AMD was setting up really well as well, but it's a name that when I look back historically on my trades in AMD that I underperform. And I found it's because to me that name is pretty wicky. It fades a lot of opening drives. It takes multiple attempts a lot of the times, despite it closing maybe at high day. And so if I were to look at Qualcomm and AMD and weighed their setups purely, I probably would have weighed AMD's a little higher. But because I historically trade Qualcomm a lot higher, or a lot better, I chose Qualcomm over AMD. So I was wondering, with your experience and how you've seen guys at the desk kind of tackle this, when they have certain names that they don't trade well, how do they manage that balance between, I don't trade this name well, but the setup is there? If that kind of makes sense.
Yeah, I think you want to be looking for. First of all, I think this is terrific. I love what you've done here. I would highly recommend that other traders keep track of the trades that they trade well. And this is an excellent best practice for going about doing that. And so you'll hear us say internally a bunch of times if you're sitting in enough AM meetings, you'll hear us say, all right, that sector doesn't trade very well. Okay, that stock isn't a really good intraday stock. For instance, the oil sector doesn't trade well. Gold doesn't trade particularly well intraday, just to give you an example. Now, that doesn't mean that we won't trade oil. It doesn't mean we won't trade gold. It means we're going to be slow to trade them. We're going to need that stock or that sector to really pull us into it. And so, for example, when you're just starting, it might be the case that you are only going to trade something that you don't trade particularly well if it has an A+ setup. You may say, just not going to do it unless I just love the setup, I love the catalyst, I love the way it's setting up intraday, I can control my risk, I can make a lot of money on this trade, and you can create new parameters to take that trade, and you should do that. You should do that. Now, senior traders tend to just do that more instinctively, but you younger guys are better than us, and particularly in the way that you can be more systematic. And so just like you develop a ranking between 1 and 6 for whether or not you're going to take something, you can create the times that you're willing to take something that maybe is a 4 or worse, something that's tricky, or something that's a little bit more difficult for you. I do not recommend saying for any particular sector or any particular stock that I'm never going to trade it. I don't think that's what the information you're getting from the market is providing you. I think if you find a stock that's tricky, I don't think that's information is I can't ever trade it. I think the information is, man, I better be really careful about trading this, and I better save it for only the best setups. Because we all know that the stocks that you're trading, they do move. I mean, there is opportunity in that. So you're going to have to be more selective. You're going to have to be more selective for the setup that's best for you. You're going to have to make sure you can control your risk, and you're going to have to make sure it's worth your while. And if you did that, I would surmise, I would predict that you'd have a lot of success with it. So you might just sort of say, look, a playbook trade for something that I don't trade well, it's just going to have way more variables in my favor, and I'm just going to live with that. But I'm going to give it a run if it really sets up nicely.
Gotcha. Okay, that makes a lot of sense. I remember Carlton also talking about how, like, if you know a name trades really badly, you'll know exactly when it trades well. So yeah, that lines up. I appreciate it. Thank you.
No, that makes sense. I'm trying to think of something that I trade really badly that I just really, almost, I mean, gold is something that I feel like intraday, you're going to have, I think that's probably something that is going to require that sector to pull me into it. I'm just going to be real slow to trade gold intraday. And there's lots. I mean, like, it trades better overnight as it is, so that's one problem. Anyway, but I like excellent work here. Love the character sheet.
Appreciate it. Thank you. And so the other thing to take away that we've been doing was another part of our process is doing this in Notion, and so it's screenshotting the charts on multiple time frames, setting them up based on 4 different rankings, and then what is the intraday setup, where was the open, and then particular stats that we think that could be meaningful. And the reason behind doing this type of chart booking is we believe it'll help us identify patterns within setups that share similar key variables. It'll give us more of an edge, as well as repetition with different names that move and how they move exactly, and how they move based on the variables that they have. And then just figuring out in tandem what execution style works best with that. And so lastly, so the focus on this last part here is how to improve further. I believe that a big part of the edge that I have is in the ability to constantly adjust. I don't think edge is something that stays forever and is just one constant thing. With the market, it's so, especially as day traders, it's just so volatile, it's constantly changing. The current market environment's constantly changing. So just trying to constantly stay in the mindset of what is the most efficient form of execution and how can I constantly tweak and improve. But yeah, that's pretty much it. Appreciate your time, Bella.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.